Hello students, you are here because you are learning a chapter on chapter 15, correction of errors. Now, sometimes accountants, even though we put in the best of our efforts, right, we do make some errors. And these errors are usually discovered at the end of the accounting year when we check our accounts, when we check our ledgers, then we realize that, oh, actually we made some errors. So what do we do when we find out that we make a mistake? Do we just leave it and pretend nobody noticed and just like live our life as per usual? Actually, we don't lah. Just with any other mistake that we make in life, we go back, we take a look at what happened, and then we try to analyze the situation, and then after that, we try to correct the mistake that we make, right? So accountants also do the same thing. At the end of the year, sometimes when we do realize we make some mistakes, what we do is that we go back to the original transaction, we analyze the wrong transaction, and then after that, we try to identify what is the action that we should take next, and then we correct those errors. All right, so in this chapter, chapter 15, correction of errors, you will learn a few things. Number one, you will learn some types of errors which are not reviewed by your trial balance. You will learn how to correct those errors, and you will learn how to prepare a statement to adjust the profit for the year ended. All right, so let's take a look at the types of errors that might occur. So basically, there are 6 types of errors which are not reviewed by a trial balance. So sometimes when we prepare double entries or when we record entries, right, we occasionally may make mistakes. And these mistakes don't cause the trial balance to be unbalanced. So which means what? The debit and the equals to the credit, all right? The debit equals to the credit. The trial balance is perfectly fine. But the mistake has been made, and therefore we need to go back and analyze the mistake, identify the accounts that should be adjusted, and then correct the mistake by adjusting those accounts. All right, so as with any other study video, you can pause me as and when you need to write down stuff or to even go back and listen to another section again. So the first error is the error of omission. Now this happens, the word omission, all right, the clue is omission. Now this happens when the error is completely not recorded in the books at all. All right, and usually there are some clue words, keywords, that tell you it's an error of omission. For example, if they tell you it's not recorded, it's omitted. Right, so this example is a cash payment. So let's highlight the important words, right? A cash payment of $850. What is it for? It's for insurance expense. It was not recorded anywhere. Right? It was not recorded means it's omitted. It was left out in the books. So what should you do when you discover this error of omission? Because it was left out, you just record it can already, right? So since this is a cash payment for insurance expense and it's not recorded anywhere, the journal entries to record this mistake, you need to record the insurance expense, right? So you should record insurance expense increase, debit by $850. And then, since it's a cash payment, you should record cash in hand, credit or minus $850. Okay? So this is the first error. Really easy. All right, let's go on to the second error. The second error is an error of original entry. Now, original entry, this term, what does it mean? It means when you the incorrect amount is recorded in both the debit side. Originally, when you enter the amount, you enter it incorrectly. All right, so error of original entry means you recorded the wrong amount in the first place. So let's take a look at this example. In this case, goods, which is inventory, that cost you $880, and it was purchased on credit from Ali. It was recorded in the accounts as $800, right? So can you see that the amount is wrong? The transaction amount should be $880. $880 is the correct amount, but it was recorded wrongly as $800, right? So what should you record here? Now, because it's goods, so goods equals to inventory, inventory should be 880, right? This is the correct amount. Yeah, it should be 880, but wrongly recorded as 800. This is wrong. So if that's the case, what should we do now? Oops. Okay. So if that's the case, what should we do now? Okay, firstly, inventory should be $800, right? So inventory should be higher. All right, it should be plus 880, but you wrongly recorded it as $800. So inventory is now understated. Is understated. It is lesser than what it should be. So since inventory is understated, is lesser than what it should be, you should increase inventory by $80. Does it make sense? Now let's take a look at the second account, which is buy on credit from Ali. So on credit from Ali, and you buy something on credit, it tells you that this is a trade payables. Trade payables hyphen Ali, right? And this amount here, you buy from him 880. So that is the correct amount. Correct? This is the correct amount. But you wrongly recorded it as $800. Right? You wrongly recorded this as $800. So same thing, since you wrongly recorded it as $800, trade payables is also understated. So trade payables is also understated, and it is lesser. So if it is lesser, what should you do? It should be 880. You only recorded it as 800. You need to increase it by $80. Okay, so this is what we are going to do for our journal entries to correct the error. Since inventory is understated, it's lesser, we need to increase it. So inventory should be increased by $80. What about trade payables? Trade payables is also understated, is lesser. So trade payables should also increase by $80. All right. Now let's go on to the third entry. After the third entry, it becomes a little bit more challenging as each entry goes by, okay? So firstly, this is the name of the error. It's called error of principle. Principally, it's been recorded in the wrong accounting element. So when the entry has been posted to the incorrect accounting element. All right. So just to recall with you, what are the 5 accounting elements? Asset, liabilities, income, expense, and equity, right? So an entry has been posted into the wrong accounting element. So maybe an asset has been posted as an expense, or a liability has been posted as an income. All right, the incorrect accounting element. So let's take a look at this example where it's a cash purchase of equipment. All right, cash purchase of equipment, 2005. It was posted to the repair expense account. Right, so what happened in this case? Firstly, equipment was posted as a repair expense. All right, equipment was posted as a repair expense. Now, what is equipment? Equipment is an asset, right? And it was posted to the repairs expense account, which is an expense account. So that's why this is an error of principle. Can you see that the incorrect accounting element has been recorded? Asset, which is the correct accounting element. Asset is the correct one, right? But it was posted to repair, which is wrong. It's not supposed to be a repairs. So how should I correct this? Now, in this case, equipment is the correct account. Oops. Equipment is the correct account, and it should be 2,500. Right? Equipment should be 2,500. But it's wrong. You didn't record that. So now equipment is understated. It is lesser. All right, it's understated by 2,500. What should you do? You should increase equipment by 2,500. Okay? What is the other wrong account? The other wrong account is repair expense. All right, repair expense is the wrong account now. So repair expense is the next account that you need to adjust. So the next thing that is wrong is repairs. So repair expense should be 0. All right, it should be 0. But you went to record it. But now it is 2,500. It is wrong. All right, it is wrong. So what should you do now? So you need to know that repairs is overstated. All right, it's too much, too high. And since it's overstated, it's too high, you need to reduce it by 2,500. Okay, so hopefully this makes sense to you. If it doesn't make sense, go back and listen to it again. Now, how does this translate into journal entry to correct the error? Firstly, if equipment is understated, it should be increased, right? And we are going to increase it. So we are going to record it as equipment debit or increase by 2005. Secondly, repairs is overstated, is too high by 2005. So how should we correct it? We are going to reduce repairs or credit it by 2005. This is the third error called error of principle. We go on now to the fourth error. Oh, sorry. There are other examples. So can you think of some examples? All right, can you think of some examples just to give yourself some ideas? Okay, so I have 3 examples for you. It depends on whether you want to write them down. So one possible example is when your drawings is debited to the expense account. In this case, an equity account has been recorded as an expense account. So that is an error of principle. Another possible example is when there is a credit purchase of good, you credited cash at bank. All right. Instead of crediting trade payables, you credited an asset instead of crediting a liability. So these are some possible examples. Right, let's go on to the fourth error, which is an error of commission. Now in this error, the entry is posted to the correct side of the ledger, but it is the wrong account. So the debit and credit all correct, but the account is wrong. All right. Now generally, in this situation, right, both the affected account belong to the same accounting element. So let's take a look at that as an example. So in this case, I purchased goods, $500, and I bought it from Lucy on credit, but I posted it to another account called Lucas. All right, I bought it from Lucy, but I posted it to Lucas. Now the inventory got no problem. All right, so inventory increased, no problem. It is actually the other account, the credit account, that has problem, right? Instead of recording it as Lucy, I recorded it as Lucas. So that is wrong. So how do I analyze it? So firstly, when I buy goods from Lucy on credit, I should record trade payables, Lucy, right? Trade payables, Lucy should be $500, right? But now is 0. You did not record anything at all, so now is 0. So this is not right. It should be $500. So what must you do? You should actually record. So Lucy should be Lucy is now understated, right? And since it's understated, it is 0. It should be $500. It's lesser than what it should be. So what should you do to Lucy? You need to increase trade payable Lucy by $500. Next, what is the other account that is wrongly affected? The other account that is wrongly affected is Lucas, right? So trade payables Lucas is also wrong. Should not have Lucas at all. All right, Lucas should be $0, but now it is $500. This is wrong. Lucas should be 0. You didn't buy anything from Lucas. So Lucas is now overstated. Too high. And since it is too high, what you need to do is to bring it down to deduct $500 from Lucas. All right, so how should we translate this into the journal entries to correct the error? Firstly, since Lucas is overstated, it's too high, I'm going to bring Lucas down by debiting him. The other account, what should I do? Lucy is too low, so I'm going to increase her account. I'm going to say that I owe her money, and I'm going to record it as a credit or plus. Okay, so yes, there are many of such such examples where you post the entry to the correct side of the ledger, but it's the wrong account. So many other examples, and you can take a look at some of these. Up to you how many you want to copy. So I'll just run through some common one. For example, you paid rental, which is an expense, but you debited it to salaries, which is also an expense. You bought furniture, but you debited it to office equipment, which is also an asset. You buy goods on credit from A, but you credited to trade payables B, both are liabilities. Interest expense recorded as commission income, both are income, and so on. So it depends on how many you want to copy. All right, so we are now going to go on to our fifth error. All right, our fifth error, the error of complete reversal. Oh, I'm sorry, excuse me. There are 5 errors, not 6. All right, so actually only 5 errors. So the fifth error is the error of complete reversal, completely recorded on the wrong side. So what is the error of complete reversal? Like its name suggests, it's posted to the correct account, but it's the wrong side of both accounts. So debit recorded as a credit, credit recorded as a debit. All right, debit recorded as a credit, credit recorded as a debit. Okay, so let's take a look at the example. There's a check of $400 and it was received from a debtor or credit customer, Shiny Gems. All right, and it was credited in the bank account and debited in Shiny Gems account. Hey, not right, what? If you receive the check, right, you should not credit bank account, right? It's wrong. You should actually debit it. All right, you should debit bank account. You shouldn't credit, right? You should debit a bank account. Okay, so that's the first mistake. So I'm just going to write down the mistakes here, okay? Mistakes. Okay, so your bank account, you credited. This is wrong. You should actually debit it. All right. What is the second mistake? You receive money from Shiny Gems, right? Now, if you receive money from Shiny Gems, it's trade receivable. Shiny Gems, okay, the name. And you receive money from people, you receive money from a trade receivables, you should reduce your trade receivables, right? But what happened is that you debited it. When you debit it, you actually increased it. This is wrong, all right? You should actually be crediting it, right? So let's analyze this transaction and see how we can correct it. All right, so firstly, let's start with Shiny Gems. All right, let's start with the bank account first. So bank account, you have actually reduced it, deducted it, right? So bank account should be increased, actually. It should be an increase of $400. But now it is negative $400, right? And that is absolutely not right. It should not be negative 400. It should be positive 400. So you need to move from negative 400 to positive 400. So what should you do? Actually, the bank is understated, right? Because instead of increasing it, you went to decrease it. It's understated by how much? Not 400, no. It's actually understated by 800. The error times 2 is actually understated by 800. Can you understand why it's understated by 800? Because it should be plus 400. But you went to minus 400 instead. So instead of increasing it by 400, you went the other direction and you deducted 400. And so now it's understated, too low by double the amount. Since bank is understated by 800, what you need to do now is you need to increase bank by $800. Okay? The other account affected would be trade receivables shiny. Trade receivables shiny should be deducted, all right? You should be reducing it by $400. But you did not do that. You went to debit it. You went to increase by $400. So same thing. Instead of minus 400, you went to plus. You went the other direction and plus another $400. So what happened now? Trade receivable shiny is now overstated. Sorry, it is overstated. It is too much. Instead of minusing 400, you went to plus, right? So now it's overstated by $800. The error amount times 2. So what do you do when you want to correct it? It's overstated, so you want to make it go smaller. You want to reduce the amount. So you minus $800 here. All right. And so how should you correct this mistake? So the errors, the journal entries to correct the error, bank is understated by $800. So you need to increase it. So what you're going to do is that you're going to increase cash at bank account by $800. And the other account affected is trade receivable, shiny, and you are going to decrease it because it's overstated. You are going to decrease it by $800. So there are actually some guidelines, all right, some steps that you can take whenever you identify that this is an error of complete reversal, that both entries are posted to the correct account, just that it's the wrong side of both amounts. All right, and these are the steps. All right, the step is write down the correct account. First, write down the correct account. So in this case, write down cash at bank, and then write down trade receivable shiny gem. Next, identify the correct debit and credit. So if you receive money in cash at bank account, it should be a debit. So just keep it in mind, this should be a debit. And then after that, you take the error amount times 2. So the error amount is $400. So you just take $400 times 2, put in the debit account for cash at bank. For trade receivable shiny, it should be a credit, right? Because trade receivable shiny paid you, doesn't owe you anymore. So credit, and you take $400 times 2, $800, and put it in the credit account. So this is the general idea. All right, so let's do an example. All right, so you can try this example. Example number 1, you can pause the video now and try out the example. Try to identify the name of the error and the account. After you have tried it, then you turn on the video again and check your answers. No point just copying the answer. So pause the video, try it, and then check your answers. All right, so have you tried your answers? Rather, have you tried to identify all the journals? If you have tried to correct all the journals, now you can check your answers. All right, so just do a quick check. Did you have these answers? All right. If you have any questions at this point in time, you can check with me. Otherwise, I will do a very quick explanation of the various journal entries. Okay, so let's take a look at the first one. Credit purchase of goods amounting to $340 was recorded as $360. Okay, now in this case, it's a credit purchase of inventory. Okay, so the inventory that you purchase is 340, but you recorded it as 360. So this is an error of original entry because the original amount is 340, but you recorded as 360. You recorded amounts that were too high. Now, since you recorded amounts as too high, what you need to do now is to reduce both the accounts. That's why you took inventory minus 90 and trade payables minus 90. So that is error 1. Error 2, error of omission. Why is it an error of omission? Because of the clue here, it says that it's been omitted from the books. So since it's been omitted from the books, you will need to record it then. The double entry is quite straightforward. You paid $1,200 for utilities, never say cash at bank or cash in hand, so whichever. Because it's $1,200, I choose to think that it's cash at bank. All right, so cash at bank, credit $1,200, and the other account is utilities expense. All right, error number 3. I bought office equipment, $4,000, but I recorded it as a repair. So office equipment is an asset that has been recorded as a repair, which is an expense. So this is an error of principle. All right. Now, I bought office equipment. It should be increased by $4,000, but I did not do that, right? So what should I do now? My office equipment is understated, so I need to go and increase my office equipment when I correct my mistake. So office equipment, debit 400. Next, this 4,000 was recorded as repair expense. So I actually increase my repairs, right? But it's wrong. It should not be an increase of repairs. It should actually be, it's not right, all right? This increase of repair is wrong. So since it's wrong, I need to correct it. It's overstated, so I need to reduce it. So my repair expense need to be deducted by 400. That's why credit repairs expense. Next, error 4. There was a payment of salary, so you paid salaries 1,500, but it was recorded as a commission expense. Now, both of these are expenses. That's why it's an error of commission, where the accounting element is right, but the account name is wrong. Since I paid salaries, I should record salaries increase. So plus salaries 300. And I wrongly recorded the amount as a commission expense is wrong. So since commission expense is wrong, it is overstated. So therefore, I need to reduce commission expense by credit 1,005. Okay. Lastly, 550 check or 550 received from Betty had been debited to Betty's account and credited to Cash at Bank. So that's not right. Because if you receive money from Betty, you should credit trade receivable Betty, right? And then you should debit Cash at Bank because you receive money, you have more money. So this is an error of complete reversal. Now, since it's an error of complete reversal, what do? You should write down the correct account, which is Cash at Bank and trade receivable Betty. And then after that, you take the amount and put it in the correct debit credit, and then you times 2. Right, so in this case, the error, the mistake, right, is actually 550. You should take 550 times 2. All right, and at this point in time, you would have done your first practice. Please go ahead and do practice workbook chapter 15, exercise 1, question 1 to 4 on foolscap paper. After you do this, you should bring it to me and I will show you, and you should check your answers. All right, and then if you have any difficulties, I can explain it to you then.